Eric van Leuven, welcome to the Iberian Property Investment Talks. It's a pleasure to have you as a member of the Editorial Council, and the idea is to have a broad idea on Iberian terms. And my first question is, which are, for you, the most impacted real estate sectors?
Hi, Antonio. Thank you for having me. It's a pleasure. I think if we talk about the impacted sectors, you need to talk first about the impact generally. And of course, everything is impacted at the moment. I mean, our daily life is heavily impacted. The way we work, sitting at home. I think yesterday was my 40th day at home. So I've done the quarantena. It affects how we shop. It affects how we play, and in fact, how little maybe we play. So all of this, of course, things that impact the way people behave, impacts real estate. Immediately, of course, the major impact is particularly felt in the hospitality sector because hotels are closed. Most of the hotels are closed, both business hotels and resorts. In Portugal, also very relevant is the short stay accommodation, which was a very popular investment medium until recently, and of course all of those accommodations are closed, and often they are owned by individuals, and so this is a complement to a salary or maybe an alternative to a pension. So this has a big impact on families. So the hospitality sector clearly in the first place, then retail, because most retail is shut. All non-essential retail is compulsory closed. Shopping centres are open, but of course with very little occupation. Only again those shops that sell essential things, and of course that's a major issue also. Well, firstly, of course, for the retailers themselves, because many will find it difficult to come through 2 or 3 months of no revenues. It's a very heavy burden on the shopping centre owners as well, because they still have to keep the shops open, the centres open, but be maintained, but be secured, etc. So retail, I guess, is clearly the second most affected sector. In offices, it's less severe. Obviously, most offices are not occupied at the moment, and most buildings are still operational. We manage dozens of office buildings in Greater Lisbon, and there's very little occupancy, but all of them, of course, are still operational. In terms of rent payments, there are some tenants requesting discounts, but not that many, and so it's a much less severe issue than in retail.
And Editorial might benefit from e-commerce?
Well, the logistics sector, I think, will clearly benefit. I think they're well capitalizing on the increased e-commerce at the moment. I think there's some supply chain issues and also some labor shortage. So it's I think logistics are adapting to the new reality as we speak, but clearly in the medium or in the short and the medium term, they are well positioned to benefit from this sector, from this crisis.
My following question is: who is now big players in the investment market? It will be the time again for the opportunistic core investors still be there. If you want to guess figure, what will be the investment volume for 2020 in Portugal? That's a very difficult guess, of course.
Yeah, it is. Well, interestingly, of course, in 2019, the total volume was just over 3 billion euros of commercial real estate transactions. The first quarter of 2020 was the best quarter in history. The market transacted about 1.5 billion euros worth of commercial real estate. Some very large transactions, of course, the establishment of the Sonai or the Sierra Prime portfolio, which saw an investment of about 800 million euros on the part of Allianz and a Finnish pension fund. But also other shopping centres were traded in the first quarter of the year, some office portfolios and some large single assets as well. So all of that in the first 3 months of 2020 came to just over 1.5 billion euros. So we were clearly set for the best year ever. And of course, it's very unlikely that we will indeed even reach the 3 billion, which we did with the market did last year. We can see a pipeline of another million, maybe 1.2 million, with deals which have not aborted, which have been postponed, or some of which are still happening, albeit probably at a slower speed, because of course there's a lot of practicalities that make this more difficult. Although notaries are open, some notaries are open for business. And online you can do quite a lot. So, I mean, my best guess is somewhere in excess of 2 billion this year, maybe 2.5. I think we would do very well if we did 2.5. In terms of the types of buyers, I think you'll see after, at the rebound, you'll see probably two types of buyers. You'll see the opportunity. The core players. I think in the first instance. Of course, there's a lot of core money within the funds, the local funds, the German funds, other core vehicles. In 2019, billions and billions of euros were raised for many, many funds. And a lot of that, of course, at the moment is dry powder, is sitting, waiting to see where it can be applied. So at the rebounds, I think we'll see the core funds become very active quite quickly. I also think, of course, that the opportunistic players are clearly positioning themselves and looking for distress, of which, regrettably, there will probably be quite a lot of.
On these very uncertain times, Cushman Wakefield has major practice of valuations. So what international rules, how valuations will be made in following months? This is a very challenging moment for valuations, I would say. And a correlated question is, what about the pipeline under construction? Developers and investors are keeping their pace of investments, or they are trying to slow down?
I would be tempted to answer the last question, not the first one about valuations. But I'll try. Valuation, of course, is extremely difficult at the moment. The RICS, of which both you and I are a member, Antonio, yes, has a very easy way out, which is called material uncertainty. And so in a valuation report, you start the report by saying there's so much uncertainty that really we don't know. Of course, that's simplifying matters a lot, but it is very difficult to assess value at the moment. I think that as I mentioned previously, the interest and the dry powder of core players, that the very, very prime assets, particularly in the office and logistics sector, may not suffer as much in value. In fact, for very core prime assets, I think there may actually be competition amongst core players, and therefore pricing and value should hold. The secondary real estate, of course, is much trickier, and hospitality and retail also more vulnerable. And particularly with retail, it's very difficult to underwrite the NOI, the net operating income, which of course is a basis for the valuation. To foresee what rents will do over the next months and a couple of first years after the rebound, in terms of sales of shops, and hence the capacity of retailers to pay rent. So I think a lot of valuation, of course, also depends again on the recovery and on the sanitary measures. What will happen to shopping centres? Will there be reduced a number of consumers per 100 square meters, for example, and will, from a psychological standpoint, will consumers easily return to areas which are quite densely populated? So it's a tricky question, which at the moment, as I said, the RSDS allows valuers to quote the material uncertainty of the current times. In terms of new development, of course, one of the advantages of at the moment of Portugal, one of the very few, is that construction is still continuing, and so there's no real reason for construction to slow down, other than maybe some lack of materials, which we're already hearing and experiencing. Of course, Cushman Wakefield also does project management, and the projects that we manage, we're now finding that some of the material which needs to come from abroad, or which there's not a lot of stock, starts to become scarce. So that may be a reason for construction to slow down. Development as such, therefore, from a practical point of view, does not necessarily need to slow down. But of course, finance is going to be trickier. And we're already seeing that the Portuguese banks are clearly focusing on their current loan book and on helping the small and medium businesses to survive, and are less keen on lending money to speculative development. So I think the finance will probably be a hindering factor in development.
We will see some consequences of these quarantine days. Digitalization, because we are now getting more used to shop online, stay home at work. On macroeconomic terms, we are printing a lot of money. So what does it mean, liquidity in the economy and for real estate?
Mm-hmm. Well, the effects of all this, of course, remain to be seen. But what I think is clear is that they will be quite brutal and quite devastating. Portugal is a country of a lot of small and medium-sized companies, and many of those will not survive without with 2 or 3 months without revenues. So I can foresee quite a lot of bankruptcies, a lot of unemployment. The growth, or the negative growth for Portugal, depending on who you believe, is estimated to be between -7.5% and -10% this year, which is a real shame, because Portugal was doing so well coming out of the previous crisis. But what it didn't do, and particularly, of course, under the current government, is to continue to restructure the economy to make it more competitive, to make the state smaller. And also, it didn't do enough, in my view, to relieve the debt burden. The debt came down somewhat, but not enough. And so I think we're going to go back, or even exceed the previous peak in public debt levels, which were, I think, 130% in 2014, and the estimate is now 135% next year, which of course is a factor of both the GDP decreasing and, of course, the debt increasing and being a larger volume on a smaller GDP. So I think all the printing of money can only have one effect, in the sense that someone sometime has got to pay this. And so although our Prime Minister denies it, I think it's very difficult to foresee or to not foresee austerity. And austerity will have an effect on occupancy, on spending, on new development, on finance, etc. So I'm not very optimistic at the macroeconomic level for the next couple of years. In terms of digitalization, I think that is maybe the positive lesson from this situation, is that we're actually finding that working from home works very well. Technologically, it works extremely well. On the other hand, what we do, I think, also come to conclude very quickly after 40 days, is that we miss the social interaction, we miss the inspiration we get from colleagues, etc. So I don't believe that this will be the beginning of a trend where everyone will work from home all the time. But I do think that more people will work from home more often. And so that may have an effect on office occupancy. Maybe you companies would only plan for 70 or 80% of desks desk for 70 or 80% of staff, and not for 100%. On the other hand, that effect may be neutralized or offset by the other trend, which is that I think we don't want to work so much on top of each other as we did, with ratios of 5, 6, or 7 square meters per workstation, per staff member, and so I think in terms of office occupancy, maybe one effect will compensate the other. In terms of how we occupy the offices immediately after the lockdown, I think it's a very interesting question. At Cushman Wakefield, we're working hard on a recovery readiness task force, which in fact is launching today as I record this, the Recovery Readiness Guide, which is like a 35-page guide for occupiers, sort of a step-by-step with recommendations and suggestions as to how to get staff into the office, how they should behave within the office. And that includes the 6 Feet Office initiative, which we launched a couple of weeks ago, and which gives a lot of practical tips about how to avoid too close people being too close to each other on the basis of certain routes set out in the office, distancing from desks and workstations. And so this is very much on our minds at the moment, as to how we go back into the office step by step, because it won't be 100% all at the same time. So watch this space. We're working very hard at designing our own office at the moment to allow for the 6 feet distancing.
Challenging times. Eric van Leuven, many thanks for being with us. It was a real pleasure.
Pleasure was mine. Thank you, Antonio.
Thank you.